Hi fighters, how you doing? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today's video is going to be on how to be able to trade during a financial crisis. And I want to be able to go through this. This is very important information. We're actually going through a time that we probably won't necessarily see again in our overall lifetime. So it's very important to be able to capitalize when the market is actually putting us into a position of where people are going to end up being a lot of fearful, and we're going to end up seeing a lot of stuff happen within the financial market where the market is starting to crash, people are starting to lose their jobs and things like that. So the question to me in general that I have been receiving is, how do you trade throughout the financial crisis, and how do you trade when stock markets crash and everything else like that? And that's what this video is personally about. So before we end up getting started, let's go ahead and go through the Forex disclaimer. I am not a CPA, which means that I'm not going to end up telling you how to be able to trade. What to be able to trade for buying or selling. What I'm going to end up doing in this video is basically giving you education. From that, you're going to end up making your own decisions on what you do for its overall trading. Now, understand that past performance is not indicative of future performance, and understand that there's risk involved with each and everything that you end up doing. But without that being said, let's go ahead and hop into it. So what we're going to end up talking about is, and we're going to break it down into 4 different sections. We're going to talk about cause and effect. We're going to talk about fundamental analysis. We're going to talk about a financial opportunity that is showing up at this particular time. And if you have seen our thumbnail, we actually end up making at this point almost 2,800 pips, and it's still going on at this particular point in time. And we're going to end up talking about safe haven trading, and I want everybody to be able to understand that. Now, understand this: an investment in knowledge pays the best interest. I did not say that, Benjamin Franklin did, but I truly do believe in being able to gain knowledge for yourself so you can invest in yourself and invest in being able to create capital for yourself during these trying times. So with that being said, understand this: the fearless, not the fearful people win inside of this market. If you go back to what happened in 2008 with the housing crisis, the people that did not make a move during that time did not reap the benefits of that overall time. The people that end up buying when people were selling and people were being fearful end up making their wealth within that overall time. So just understand that we're getting an opportunity to be able to do that as we speak at this particular time. There's no reason to be afraid about it. Take your opportunities. There's opportunities during this time. So obviously the leading cause of what's going on is COVID-19. And look, when I end up making this video and creating it, the one thing that I end up noticing at this particular point in time worldwide, there's over 1 million cases that are confirmed. And that's not even counting the deaths and everything else that are put together. I don't want to necessarily talk about the deaths. This video is not to be able to scare anyone, but we know that that number is rising, and we know that it's been rising each and every day. Now, with that being said, that's had a major course of action to be able to stop and be able to slow down the virus. Well, we end up seeing a lot of major shutdowns like the NBA, NHL. You look at what's going on with every walk of life from a sporting event, what's going on with every restaurant and all these other places that are basically placed in where people are basically socially putting together and being together. What we're basically doing is we end up going from 10 feet to 6 feet. And how many people you can actually be able to have in a room. You can have less than 6 people inside of a room together, and being able to do that, you have to remain 6 feet away, right? It's a new way of life. Right. In order to fight this spread, our government has basically said that colleges and schools and major businesses have been shut down. Right. And which affects the working community. And let's talk about how it's actually affecting the working community. In February of 2020, based off of the economic news, this is on fxstreet.com, and I'm going to send you a link on fxstreet.com. If you've never been to that, you can actually be able to look at it. The new U.S. jobs that were actually created was 273,000. From that point in time, in March, that number ended up going to negative 701,000. And that was based off of the non-farm payroll. They end up happening basically in April. Now, I give you even a scarier number. When you're not able to, when there's no new jobs that are being put together, and you have to be able to socially distance, and you have to be able to stay away, then that means people are actually getting laid off. When it comes down to unemployment, there's negative 6,648,000 people that end up putting in initial jobless claims in March. That's more than 3,000% from last month. So the question is, when you're doing something like that, how are you going to be able to make money within that time? What are you going to be able to do? Now, what has been said online and is very important. You're going to end up learning some skill out of this, right? People are going to end up taking away a few different things. And one of the skills that you need to do is be able to learn how to invest in yourself and learn how to be able to create your own business where you don't necessarily have to work for someone else, and you can be able to do all of this on your own, so you can end up being recession proof. In times of crisis, there are financial opportunity, but the only way that you know how to be able to take action now is by being able to figure out a way how to be able to invest in yourself and learn how to be able to trade. Now, what we're going to end up talking about in this video is going to be based off of the Forex market. So you can actually be able to look at this in stocks and bonds and everything else like that. I'm talking about this from a Forex standpoint. So here's my case study. That's what I want you to understand. Over the course of the last 11 days, I'm just going to talk about 11 days once we end up having everything that actually end up breaking out. The news has basically been going on for almost a month to maybe a month and a half. But just based off of the last 11 days on the pound US ended up dropping 1,800 pips. The Australian United States dollar ended up dropping 1,160 pips. And if you look at oil just in general, it ended up dropping to lows since 2002, where it ended up going down to $19.25 a barrel, and it's still expected to drop down almost to $14 a barrel. What does that mean? There's opportunity to be able to capitalize on what's going on with the overall market. I'll give you an even better one. Based off of what ended up happening with the stock market crash about a couple weeks ago at this particular point in time. For 11 days, the Japanese yen ended up going down almost 1,100 pips. The market basically ended up turning around and rising up based off of what we end up doing for us, our actions, and putting together all of these different stimulus bills to be able to push back in. And people using safe havens to be able to trade and hopefully be able to preserve some of their capitals. In 30 days, the market has moved 2,600 pips. Now, the question that you probably should be asking me at this point in time, or the question that I think that you're going to end up asking me at this point in time, is how can you take advantage of this? And that's by safe haven trading. Now, safe haven trading refers to an asset that is expected to retain its value when a market takes a hit. And that's globally. That's everything that ends up happening. So we're going to break it down into these three different safe haven currencies, and we're going to end up talking about one other type of currency that you can be able to invest in at this particular time and be able to say, hey, if something happens, I can be able to invest in this, and this will end up preserving my capital, possibly even up giving me an opportunity to be able to make some money when times are actually going bad. And that is the United States dollar, that is the Japanese yen, and that is the Swiss franc. So let's talk about the Japanese yen first. Why is this a safe haven? Well, let's think about this. The Japanese yen typically loans out money at a low interest rate. And what they try to do is they try to keep the yen as low as possible so people can be able to loan from that. And then after that, the people that end up getting that loan basically end up converting their yen into stocks and basically end up trading that with risky assets worldwide. Now, this can work out very well over and over again because the market has not crashed or do anything else like that. Now, when the market crashes, now, obviously, they have to be able to pay back their loan when it comes down to the Japanese yen. So they have to convert whatever their currency that they end up having back to the yen. And first off, they end up paying that loan back to the Japanese yen. Well, what some other groups actually end up doing is that to preserve their capital, possibly be able to make a little bit more money from there, possibly be able to get their money back, is that they invest in the bonds and securities to be able to preserve their capital. Then after that, they end up paying it back. So what does that mean? The yen is always trying to be weak so they can be able to preserve and be able to give out money to be able to loan, right? In times where the market basically ends up turning around and it starts getting weak, then the Japanese yen gets stronger. So if we know that, then that means that we can capitalize on that in situations when the market is basically end up going down. You should be able to look at Japanese yen stock and see Japanese yen currency and see that against other pairs that it's actually getting stronger and it's holding its value compared to certain pairs that end up doing very bad during this time. Now, King dollar. If you look at the United States dollar in situations where the market ends up going bad, it has a lot of strength within weakness. Now, what I mean by that is, even if the dollar is reporting bad news, in which you look at it, and the news that I ended up showing you a little bit earlier was based off of U.S. news and being able to have more than 6 million people without jobs and everything else like that. Traders look to buy the U.S. dollar even when the currency is actually going weak, because other currencies are basically being weak at the same time. It just means that the U.S. dollar is getting weaker. I mean, it's being stronger, and it's actually getting weaker less than other currencies. Here's a quote that I ended up getting from John Doyle. As we see the pool data coming in from Europe, the United Kingdom, Italy, if you're trying to be rushing anywhere, it would be nice to go to U.S. Treasuries and the U.S. dollar as a safe haven. And if you look at the charts and you look at all of that movement that we end up showing in previous slides, you can see why people are actually moving toward the U.S. dollar, even in bad situations. Now, the last one is the Swiss franc. And there's a couple reasons why the Swiss franc is often known as a safe haven. The one reason more than anything else is that it's because they keep a low inflation rate. Sorry about that. So when the U.S. Treasury rates are negative, basically what people end up doing is basically end up putting their money into the Swiss National Bank, because they have so much trust that they're not going to end up pushing up their inflation rate and being in a position to where they're going to end up often being in a bad position because of the way that they end up preserving that overall capital. Now, they often end up taking a neutral stance in wartime and everything else. So when you end up seeing what end up happening with the trade war, especially with the U.S. and Japanese yen and U.S. and China, and what they were doing for being able to block off everything, you actually end up seeing a spike when it came down to the Swiss franc, because they knew that if this could end up being bad, then we could be able to place our money into the Swiss franc, and we know that our capital is going to end up getting stronger. Now, from a trading perspective, if we know that this situation is going on, then we can look at the Swiss franc as a potential way of being able to trade, and know that we're probably going to end up coming out in the positive on being able to do that. Now, one other type of way of being able to trade that's a prominent safe haven is gold. Now, for some people, you may end up asking why. Most people already know this, but some people you may be asking why. Because in the past, historically, frequently, it offers some protection against sudden, sharp downside movements in equity. Gold holds its value over time, just because of, one, there's always a certain amount of supply that's always going to end up being there. But based off of that value, you know that it's going to end up remaining around that number. It's typically going to end up rising in price compared to other things in times of overall crisis. So the only way that it could fall, and I'm going to end up prefacing it by saying this, and it kind of goes back to what happens with the stock market. Typically, what people end up doing is when they're trying to invest, they may end up investing or borrowing money to be able to do that, or working off a margin. If stock prices basically end up dropping dramatically and the investment sinks, your broker will end up asking you to put up additional margin to be able to make sure that you can hold your actual trades. Rather than selling your overall trade, what they end up doing is they actually end up pulling from gold and being able to go to your gold stocks that you end up having, on your gold equity that you end up having, to be able to hold that margin in, hopefully so your actual trade can be able to rise up and go in value. But when stock markets fall and gold is being used so much, that's the time when gold can actually be able to fall. But typically it falls at a very slow level compared to any other type of security or equity or anything else like that. So with that being said, knowing all of this information is not enough. You must apply it, right? You have to be willing to be able to do this, right? Willing is not enough. We must figure out a way to be able to do this together and be able to trade. If you're interested in being able to learn some information like that, this is something that we actually end up holding classes on, and we actually end up having a system of being able to trade based off of this. But I don't want to sit up there and brag or just be able to talk about this in general, but I want to talk about what has happened within those 11 days, about how the market has basically been moving. Over the course of the last 11 days, within our manual and automated systems, we've actually been able to rack over 2,857 pips within this time where people are actually being scared. Remember, the fearless, not the fearful, are the people that's going to end up winning in this market. And you have to be able to understand people and understand why people are actually trading and going into certain positions, so you can be able to capitalize on that movement, so you can be able to know that you're going to end up being recession proof yourself, because you always have a skill to be able to trade when times are actually going and people are being very fearful about what's going on with the market. Now, with that being said, if you want to be able to connect with us, we'll love to be able to talk to you and be able to socialize. And we have a growing community in our Carter Cow Academy group. If you want to go to that, you can go to facebook.com/Carter Cow Academy. We're also on Twitter and YouTube. You go to Carter Cow Cap or Carter Cow Capital on YouTube, or you can go to our Instagram page or our Trade and View page or any other social media accounts that we end up having. If you want to be able to set up a free webinar that basically ends up talking about our Fibonacci fundamentals course that we end up talking, which is our baseline way of being able to trade, especially manually, you can go to cartercowcapital.com/start here and actually be able to hop into it. But that's all for our overall presentation. I do appreciate each and every one of y'all basically hopping in and being able to go into this video. Like always, please make sure that you end up planning your trade and trading your plan. Everyone, y'all end up staying safe, and we'll see you in the next video.